Stocks are hammered for a third straight week, as shown on this weekly chart of the S&P 500. It made new 52-week lows here, third week in a row. And this, if you take this period from this high here, looks like a very similar move back here in March of 2020. We look at a perspective by looking at the monthly chart of the S&P 500. You can see that this big down move on a monthly basis, you have to go back to March of 2020, back during the COVID crisis, to get such a big move. So we are definitely in bear market territory. We look at the NASDAQ Composite Index. We get a very similar move, very similar big down, big red candlestick, and that compares back in that period there. If we look at the NASDAQ Composite on a daily basis, we can see that it's just 11 points shy of making it. It did make a new closing low, 52-week closing low, but it's 11 points shy of making a new 52-week low. Whereas if we look at the SPX on that, we can see it definitely made a new closing low and a new 52-week low. Now, if we look at the ETFs that we follow, we have 12 ETFs that have look similar to this, that made new closing lows. We'll take a look at that. The only thing I can think of that, it's the markets finally come to realize that the Fed's aggressive policy stance, that is raising the rates 75 basis points during every meeting until inflation gets under control, is the reason for this pullback that we have, this recession that we're in. And most analysts, though, have a mild recession. They're still they've shifted from slowing growth view of the economy to a mild recession view of the economy. But in my opinion, it's going to be much worse than any analyst out there is thinking, because we really haven't even entered into a technical recession yet. So it's going to get a lot worse. So anyway, let's take a look at those ETFs that we trade that made new 52-week lows. First one is the SMH, the semiconductor index. You can see right there, there's a new 52-week low, and would still be interesting buying that one at 195 if it gets back up there. We might have October being a month of, after you have a month where you lost 10.5% on the NASDAQ and you lost over 9% on the S&P 500, we're due for a bounce. We're due for a bounce. So we'll be looking to go long if that does work its way through. XLF, that's the financial sector, made a new 52-week low. XLK, that's technology, also a new 52-week low. This chart we're looking at, by the way, is a 6-month chart, but if we change that to a 1-year chart, you'd see it's still the same look. XLI, the industrials sector, new 52-week low. Retail sales, ain't going to go anywhere without that. XLB, materials, going to follow the industrial sector. IYR, I think, is real estate. Yep, pretty ugly looking. And of course, the Q, which represents the NASDAQ 100, it did, in fact, make a new 52-week low, even though the NASDAQ Composite Index did not. So we've got the the SPY. It's consistent with the S&P 500. They both made 52-week lows. We've got the transports. IYT. Ugly chart. ITA, that's aerospace and defense. And last but not least, silver. IO silver. Of course, silver made its low back here, so but that still was in September. It was September the 1st. So let's take a look and see how we did. We made 40 grand in September, 10.5%, bringing our year to date up to 115%. We're better than our benchmark S&P by 140 percentage points and the NASDAQ by almost 148 percentage points. So we're doing very well. Again, if you're interested in becoming a G3 patron, $20 a month, highlight that in your browser. And if you'd like to follow me on my YouTube channel, that's the link right there. Before I go, I would like to take a look at the heat map. So this is a 1 month heat map of the S&P 500. And there is a lot of red on that screen. The only green and was the healthcare sector, probably the only green sector. There's Regeneron, Biotech, Netflix. Apparently they got some of their subscribers back. Really ugly month. Well, that's all for this week's video. I'm Greg Gallagher. Good luck and good trading.